You've been hearing about AI stocks for months. Nvidia gets all the headlines. Everyone talks about Microsoft and Google. But there's a $31 stock that's quietly up 18% in just the past month that most investors have never heard of. Here's my read on why super microcomputer might be the most misunderstood opportunity in the AI revolution, or the biggest trap waiting to happen. I've spent years tracking what actually moves markets, and super microcomputer is one of the wildest stories I've seen. This stock hit nearly $60 earlier this year, then crashed to under $20. That's a 60% wipeout that left most retail investors running for the exits. But here's what caught my attention: while everyone was panicking, the stock quietly started climbing back. We're now at $31, sitting right in the middle of that brutal range. The question every smart investor should be asking is whether this comeback has legs, or if we're just watching a dead cat bounce before the next leg down. Here's what most people miss about the AI boom: it's not just about the chips. When companies like OpenAI or Meta want to train their next model, they don't just buy Nvidia cards and call it a day. They need massive server systems that can handle the heat, power, and complexity of AI workloads. That's where Supermicro comes in. They build the specialized server infrastructure that makes AI possible. Think of Nvidia as the engine, but Supermicro builds the entire race car. And with AI data center spending exploding, this isn't a small market we're talking about. But here's the part that keeps me up at night analyzing this company. The numbers I'm seeing suggest something interesting is happening beneath the surface. That 18% move this month isn't random, it's happening while the broader market has been choppy. Someone is accumulating shares, and it's not retail investors chasing headlines. The company sits at the intersection of two massive trends: AI infrastructure build-out and the move toward more efficient, liquid-cooled server systems. Their technology is exactly what hyperscale data centers need as AI models get more power-hungry. If this thesis plays out, we could be looking at a company that went from overvalued at $60 to genuinely undervalued at current levels. But that's a big if, because the risks here are very real. Here's my honest take on what could go wrong with this investment thesis. First, Supermicro operates in a brutally competitive market where margins get squeezed constantly. Second, they're heavily dependent on a few large customers. If one major hyperscaler decides to build servers in-house, that's a huge revenue hit. Third, and this is the big one, we don't have clear institutional ownership data on this stock yet. That tells me the smart money hasn't definitively chosen sides. When I see a stock moving 18% in a month without major fund involvement, it makes me wonder if we're missing something crucial. The technical picture shows we're still well below those highs, and there's a real chance this is just a relief rally in a longer downtrend. I'm watching three specific catalysts that could flip my entire perspective on SMCI. First, if we start seeing major institutional investors, the kind that file 13F forms, taking meaningful positions, that's a green flag. These funds have research teams that dig deeper than retail investors ever can. Second, any major partnership announcements with cloud providers or AI companies could validate the long-term thesis overnight. Third, I'm watching the next earnings report closely for gross margin trends and forward guidance on AI server demand. If they can show expanding margins while scaling revenue, this becomes a completely different investment case. But honestly, the catalyst that would make me most bullish is something nobody expects. Here's what I think the market is missing: everyone is focused on the AI chip shortage, but the real bottleneck might be server infrastructure. Companies have Nvidia chips sitting in warehouses because they can't get the specialized server systems to deploy them effectively. If Supermicro can solve that bottleneck, they become essential infrastructure, not just another hardware vendor. The stock's recent move suggests some investors are starting to figure this out. At $31, we're getting a potential infrastructure play at a fraction of what the market pays for pure AI software companies. The risk-reward here is asymmetric if you believe AI adoption accelerates rather than slows down. Look, super microcomputer isn't going to be the next NVIDIA, but it might not need to be. Sometimes the best investments are the ones hiding in plain sight while everyone chases the obvious plays. Whether this is a value trap or a genuine opportunity comes down to execution and market timing. For the full analysis including what I'm tracking week by week, check out nexusaicalls.com. And remember, this is analysis, not advice. Do your own research, understand the risks, and never invest more than you can afford to lose. The AI revolution is real, but not every stock in the space is going to make you rich.